Hey guys, it's Bobby Icino, co-host of the Futures Edge. If you watch our show, you can come and join us live. We have an event going on with Scott Shellady, the famous cow guy. You've seen him on TV with his cow jacket on Fox, on financial networks, as well as his own show on RFD TV, which is kind of a fun network. And the panel consists of myself, Jim Iorio, Michael Lee, and Kenny Polcari. We all know Kenny Polcari very well, great friend of mine and Jimmy's. And Michael Lee is one of the best sort of down to the bone stock analysts that you're ever going to meet. This is called The Cow Guy Invites You to Greener Pastures with the Common Sensocrats. So there will be policy, there will be politics as it applies to policy, as it applies to markets. So this thing is going to set you up for the next 12 months of investing. We've got a presentation, we've got drinks, we've got fraternization time, and we've got dinner. So check out the link, come to the show. You're going to enjoy it. Nashville, June 13th. We're going to have a blast. It's going to be at the Grand Hyatt Nashville. Great venue. We hope to see you all there.
I am Jim Uriel. That's Bob Icino. As always, the first show of every month, which it's May, right?
Yeah, it's May.
We have Mike Arnold, chief technician for Path Trading Partners, all around smart guy. How are you, Michael?
I'm doing well. Now I'm out of the Chicagoland area. I'm doing fantastic.
Oh, stop with that. You and Bobby, you do the same thing. And by the way, everybody who moves from Chicago, in their head, they act like the whole thing is just on fire and burning. It's not quite as bad as your memory makes it out for.
That's because you don't live there, dude.
I go there I go there once a week to visit my daughter.
You don't live there.
This morning I did.
It's a lot worse.
I pulled my weapon out this morning. A homeless guy started running right at me as I was leaving my health club.
That sounds on fire.
It's not. It is on fire. Wait, it's just not as on fire as you two think it is.
It'll be on fire after with the Democrat convention this summer. So,
by the way, when is the Democratic convention?
Well, that's interesting.
In August, isn't it?
In August.
Yeah.
Great.
Yeah, I made my getaway. I am clear. I have sold everything. I have no attachments besides my dad still lives there.
Look, in all seriousness, a lot of my friends and family members from Chicago, they get on me about criticizing Chicago. Like, it's not that bad. What happened to you? You blah, blah, blah. Same as you just did. I mean, I get it.
No, I did differently. It is on fire. I'm just saying the magnitude of the fire is slightly.
You can walk around the fires.
Yeah, I can walk around the fires.
No, the thing, I said this to somebody over the weekend. I said, look, it's not like we had a Cinco de Mayo party in our community here. And there was a couple here whose kid just graduated college and moved to Lincoln Park. He's like, he loves it. He says it's not that bad. And I said, look, I sold my motorcycle a while ago because I kept hearing from Florida state troopers that the death rate here on motorcycles, one of them had come from Minnesota, another one had come from Pennsylvania, and then a third one that talked to me had come from Ohio. They said motorcycle deaths in Florida is like triple any of those three states, at least, from their anecdotal evidence. And I said, okay, I have never died on a motorcycle. That's empirically true, but I could. So I got rid of the motorcycle. That's how I relate it with Chicago. The stats, the situational awareness had to be so much higher than when I lived there before. And I was telling somebody this weekend, you used to know where you shouldn't go and you would pretty much be okay. Mm-hmm. And those areas have expanded. Sort of like when they show the melting of the ice cap, the climate, and it kind of, that's happening in Chicago. Like the areas that you might get into trouble have expanded.
Except it's really happening in Chicago.
Except it's actually happening as opposed to climate change. But,
okay, by the way, can you rewind your memory back to the early 90s?
Yes.
Like even, it was late 80s, early 90s. It was awful in the city of Chicago. And then all of a sudden it had this huge resurgence.
It had a renaissance. Absolutely.
Yeah, but we're not back to those levels yet, but I agree with you completely. And one thing I will also add too is the Loop. The Loop has what's the neighborhood that's been taken over by a bad element worse than almost anything else. Yeah. It's pretty damn crazy.
Yeah. I'll tell another quick story, and then I'll tell you my main worry. Mike, you can tell me if you agree with this or not. A friend of mine's wife, the two of them are originally from Chicago. They're both in Manhattan now. And she went to Chicago to visit a bunch of girlfriends, had dinner with her girlfriends. I may have the numbers exactly wrong. There were like 11 of them at dinner, and one of the women said, it's not as bad as people think. And one of the women at the dinner goes, yes, it is. I've been carjacked. Another one said, I have too. And then a third one said, I have twice. It was like out of 11 women. Now, these are all just professional women in their like 40s and 50s who were like, no, it's actually really scary now. And that, again, it was still lowest probability. The highest probability was that that room would not get carjacked.
Yeah, right.
But it was a higher probability than comfortable. And the second part, the point about the 90s, Jimmy, is very on point because then a daily took over, right? And then Chicago had a renaissance.
Right.
And I don't believe in the current set of administrations, the last one or this one in Chicago, to create a renaissance. Now, it could easily happen because it's the best damn city in the world when it's on. It really is.
When it's rocking. So Eileen O'Neill Burke won, well, in Chicago, she won the state's attorney race. And, we have a ton of mutual friends. A couple of my buddies said we used to hang out with her in college, but I don't really remember. I think she's a couple of years younger than me. But she's a Democrat, of course. And she won the primary. For all you listening, that means she won the race in case you go look it up. But anyway, she supposedly is tough on crime. Now, I know that is, like throwing one deck chair off the Titanic. But again, if I can use many metaphors in one sentence, a 10,000-mile journey begins with one step.
Well, maybe they'll be able to eliminate those MAGA bleach hangings that have been happening. The MAGA bleach hangings.
Oh, yeah, right. When they were so terrible. When that guy, remember, like the week following Jussie Smollett, like literally, I work on the trading floor. One of the guys who works for me is leans very to the left and Democrat, and there's about 5 other guys, and they're like, "Can you believe this happened?" I'm like, "No, I don't. I can't at all believe this happened. It didn't happen. I will bet." I said, I swear to God, at the time, I said, "I'll bet my entire net worth against your $10 that this story, when it comes out, is not going to be the way it is." So whatever. Yeah, that was crazy. You want to talk about markets? Because I think
we could do that.
So there's some things I'm very, very interested in. Have you read Larry McDonald's book yet?
No, I haven't even bought it yet, but I will.
Larry McDonald's book is fabulous. He's going to be on the show, he says, and we're going to tighten the screws in. But he's talking about one thing, because this is going to be a theme in some of the markets I want to look at. He's like, the era of big tech and the era of growth, that was only in a 30-year, somewhat deflationary to low inflation period. And now the systems have been put in place for persistent inflation. And he mentions things like $200 billion extra being spent a year on Social Security that had to be raised up based on the COLAs. Things that most people don't think of when inflation spiked up. We're like, yeah, higher prices usually fix higher prices, but they're not gonna this time. And his contention is that we could easily see above 3% inflation going forward, which means those things growth won't do as well. But things like commodities, oil, he thinks is the absolute place to be. And I know that'd be music to your ears. So I would love, let's look at stocks first if you want, Mike. Mike, it's your choice. I'm going to stop talking. You guys go.
To that point, as Mike pulls up what he already knows I want to look at, I'm going to pull up a text that I got from my brother, another Chicagoland restaurant owner, not within a distance nor a food type to compete with Brant's Palatine open Monday through Sunday. You can do the hours. I got this today. My brother has a restaurant bakery, right?
Right.
So there's both, right? And he sent this to myself, my sister, and my sister's husband just a few hours ago. Just found out that the price of cocoa, which is obviously in anything chocolate, is going from $107 per 50-pound bag to $275 per 50-pound bag. An almost 300% increase.
Wow.
So he just told his guy who buys that stuff, not his sales rep, but the guy who creates all the pastries and stuff, the buyer of the baking goods, baking supplies, buy all you can. Just buy all you can before the price goes up, right? Which we know is one of the things about parabolic spikes in markets in general, right? Is people are afraid they're not going to be able to get in. Yeah. And they just buy all they can. So, Mike, what does a cocoa chart look like? Is there any relief coming for my brother's wonderful restaurant?
There's been relief. Okay, I have cocoa. Well, I actually have a CFD of cocoa because the futures are so illiquid, and it looks better this way. It ran up. The CFD ran up to over 12,000.
Well, what's a CFD, Mike?
Contract for difference.
Yes.
Okay.
So it's basically a representation of a contract traded over in Europe and the UK.
Got it.
So, it's a great proxy for the futures. But This CFD ran up over 12,000, pulled back to about 7,500 roughly. Now it's back to just under 9K. So there's been relief, but remember, by the time stuff hits, you were talking about by the time everything gets around to jacking prices, there's a delayed effect. Now the next, and you also remember, prices don't come down as quickly as they
don't come down. Because remember, people, that's the supplier, and they don't know when the next upshoot is. So do they price gouge? Yeah, a little bit. Is it reasonable considering, they don't know. They just went through this massive spike where they lost money. You can't blame them for being worried about another one. Anyway, go.
Right. What you don't want to see is it getting above about 10,004 again, roughly. If it gets above 10,004, it will probably retest the high area. What you do want to see now, I think this has all gone a little overblown. It was eventually at some point just everything chasing the parabolic momentum higher. Now you did have drought in Africa, and it's being completely blamed on everything global warming. I guess we're going to run out of cocoa. But you had some crop issues. You had some significant crop issues just because, but now everything is global warming this, global warming that. But it's, sometimes the crops just have problems. You have an area of exceptional drought, which just happens sometimes. It's not necessarily global warming, but it got into a momentum cycle, and everything that could chase cocoa higher started chasing cocoa higher. It plummeted for a bit, but it's on its rebound. I'm actually watching for it to roll over again, as long as it does not get back above about that 10,400. And the key level I want to see it drop below is about 5,700. Right around there would have it substantially continue back down. That would be the good price level. And here's the monthly. That you can see here. That's
wow.
That's not a sane chart. And okay, yes, there were crop issues, but
this to Mike's point about the delay, Jimmy, and you experience in the restaurant business too. You look at those two big spikes there, including the high that ended up with a lower weekly close last week, right? And that's when these guys are scrambling to buy cocoa for their clients, for their customers, right? And then they got to pass that on. So, and this is very applicable to crude oil prices, right? People see crude oil prices going down and they're like, why is the price at the pump go down? I'll save that for later in the show.
So there's your cocoa. Is it coming down remarkably anytime soon? Don't think so, but this will level out. This will probably level out, maybe not back to under 3K anytime soon, but I could see it leveling out closer to about 4,500 to 5K over the next. It's going to take months.
So tell me this: is there a way for guys like us to trade cocoa? If you said the futures contract is very liquid, I don't know.
You can still trade the futures contract. It's just you have to be able to know how to deal with locked limit days. And there are options. So if you know how to deal with options on locked limit days, that's really the problem when the futures contracts would just open and be locked. I don't think, it's great if you're going with the trend, but then it dropped with locked limits down and people couldn't get out who are riding it up. So there are ways to trade it. There are ways to trade it through CFDs and stocks too. But if the futures is locked, essentially the trade starts dropping in the CFD too. So, because there's no way to hedge it out, I just sort of steer clear.
Sounds like to trade this shit, you got to have some sort of a death wish. Just instead, why don't you just walk into a biker bar somewhere and just pick the biggest guy and punch him and see what happens? Yes?
Or just walk down to the loop and,
It's funny too, like Jimmy, I've actually thought about this before. I've thought about calling both of you, to be honest, saying I think there's a need for small to medium-sized businesses to sort of come together and say, okay, what do you guys have the biggest risk? And maybe we can put together a little sort of a hedging fund. But these lock limit days in ags, especially, like people in agricultural markets are just like, yeah, we're limit again. We'll see you tomorrow. It's like almost nothing to them. They've dealt with it so frequently. So I've just sort of
I remember being in the grains or beans, and it's like you'd show up, locked limit. All right, see ya.
Yeah.
But it's nuts. I remember, I forgot what year it was, but I think it was in beans, and there was drought conditions in the Midwest. And I think I've talked about this before. It might not have been on this, but one day it starts raining in Chicago. It's July. It starts raining. So it's locked limit up. It's raining in Chicago. It goes to lock limit down because it's raining in Chicago, where there's not a soybean grown anywhere. But people are looking out the window.
Well, that used to be the way corn and beans were traded. Like I would say, it must be raining on LaSalle Street.
Yeah.
It's such more of a global product that doesn't work. But the one corn trade I did make was because it started raining in the Midwest. It was a small one, and I just wanted to see if it would work. But yeah.
No, it was crazy. It's like a thunderstorm in downtown Chicago, not a bean or a corn stalk in sight, but let's reverse it from lock limit up to lock limit down.
So what we're saying is futures trading in the commodity quadrant carries significant risk. Tread lightly.
It's like, all right, are you going to trade cattle futures? I mean, not saying anybody related to cattle futures or anything else, but cattle futures are not, you know what, people can get, unless you are well nuanced in not only trading and cattle, but the shenanigans with I'll call them shenanigans, which what goes on or used to go on much more with trading and cattle.
Yep.
So things you don't want to, you don't want to mess with that unless you're well versed in it. Trading S&Ps or some NASDAQ, or notes or anything else. Fine. Crude. Great. Beans and cattle. Cocoa and cattle or even lumber. Lumber's another fantastic one. Oh,
so Bobby, you wanted to look at this chart just to kind of get a framework for the inflationary environment, the commodity environment, how things move, just to put a lens, look at it through a different lens, correct?
Yeah, well, I wanted to show people that like commodities matter a lot.
Mm-hmm.
We have a lot of people that are very interested in stocks and ETFs and sectors and interest rates and the Fed. Commodities matter a lot. If you look at, Jimmy, you brought up inflation, and I got to get that book because I'm super interested to read it.
Oh, you'll love it.
You look at it that perspective of people think inflation is coming down. I think that opinion is thinning, for lack of a better word. Mm-hmm. But start taking a look at commodities. What's happened to copper recently, although it's rested a little bit. What's happened to some of the other base metals like aluminum and nickel and platinum and palladium to a certain degree. And then you look at something like this cocoa and it's like, wow, why did my donuts go up? And people get all crazy. I still keep seeing people pushing videos of young people saying, there was one, I watched one this morning of a woman going to the grocery store and she goes, I bought 4 items. I bought eggs, butter, bread, and milk, and I have spent $30 and I have $30 left until I get paid next week. And these kinds of things matters, like commodity prices matter. Yeah. And it also applies to crude oil. Actually, can we look at crude oil?
Yeah, absolutely.
And the reason I say this is people ask me, I probably get this question every other day. How much does oil have to move before gas prices move? And I'm going to say something somewhat factual, but that might piss people off. A $1 move down in crude oil generally marks about a 2-cent move down in gas prices. A $1 move up in crude oil generally marks about a 3-cent move up in gasoline prices. So it skews higher, right? And it skews higher because demand for crude oil is somewhat inelastic or because of corporate profiteers. Whatever you want, I don't care which way you want to look at it, right?
Right.
It definitely goes up faster than it goes down, as Mike mentioned about all markets, right? Mm-hmm. So when you look at crude oil, you're looking at crude oil that looks short-term weak, right? I mean, you go back to, we had a spike. The recent high for crude oil happened.
We lost the chart, you guys know, right?
I'll bring it back up.
I can tell by the way he's looking that he's.
Oh yeah, good point. Right.
He wants me to talk and buy time, but that's not actually what I'm doing.
Buy time, right? No dead air.
My normal length question.
Right.
No, here you go. Yeah. Real quick before we put up this was in my feed the other day.
This is great.
Renters hope to be able to buy a home and follow the record low. My parents in their 30s. This would make a lovely second home for our family to winter in. Me in my 30s, I never financially recover from the bread and milk purchase.
I don't
Cost
mean
of
to
renting
laugh.
isn't getting any
Tragic.
better.
Tragic. I think that's why this week legendary investor Stanley Druckenmiller gave Bidenomics an F. And
It
he
is an
blames
F.
he blames the fact. Yeah, he was on an interview on that crappy TMZ Business Network, and he was talking to Kernan, who's the only guy who's worth a shit on that show. And he said, Joe Kernan asked him what grade he would give, and he said an F. And he blames the Fed for stoking inflation. And we see something like that particular cocoa chart and my brother's text. Now my brother is going to be raising, he says he's going to do two things. He's going to cut the amount of chocolate in a lot of his desserts. Well, he's buying in bulk first, so he's not going to do that yet. The desserts that have chocolate, he's probably going to end up putting less chocolate, and he's going to give them less chocolate options.
Mm-hmm.
If he gets complaints about that, price is going up 30%.
Right.
And
can I do a 30-second rant?
Yeah, please do.
These people who are complaining about it, we told you what was happening before it happened. There was a policy decision made. There was 5 states and several other governmental bodies who couldn't possibly pay their bills unless they did drastic reform, which was not going to happen, or the Fed and the federal government inflated away all their problems. It's called monetizing the debt. If you want to know more about it, contact me on Twitter and we'll talk about it. This was a policy decision. You are paying higher butter and egg prices, so Illinois didn't have to cut its spending and could keep promising massive pensions to people. This was a policy decision that you guys all, and most people watching the show are financial professionals, but if any of them voted for this bullshit, it was completely a policy. Sorry, please.
Yeah, and then you look at a crude oil chart, and Mike, I've got short-term weakness here, but long-term strength. What do you see?
Same thing. Short-term weakness. Here we've tied this back into, let me get back to the weekly. We're coming down off the recent highs. You know, we've had a 5-week pullback so far, but we're getting into that magic. We just hit the magic reversal zone between the 50 and the 62.5 harmonic. And look what's just below it. That's exactly at the 62.5 harmonic on the weekly basis.
Right around the 100, right?
That's the 200 week, which we have talked about how many times on this show. So
yeah, go back and look at it. Yeah, look at that 200 week.
I mean, look at this. The 200 weeks. Yeah, you can spike below it, but you don't close on the weekly below. Now, if we closed on the weekly below that 200, we would also close on the weekly below the 62.5, and then I'd be targeting $70 again. We are not there. We are just doing a pullback into a major support zone. All it's going to take is something to flare back up, and you can see oil potentially move substantially higher again, at least to retest the high areas. Are we there yet? No. Is there a strong buy pattern yet? No. But I am keeping my eyes peeled as long as we don't close below 75 for a strong buy pattern.
A little fundamental thing on crude oil. The administration just announced purchase of 3.3 million 3.3 additional barrels of oil in October for the SPR, just below $79. So there's been people applauding that. But when you look at the total stockpile through April 26th of the SPR, sitting at 366,271, a full 260,000 barrels below January of 2020.
You say 1,000, you mean million, right?
What did I say?
1,000.
Yeah, I meant million. So you're seeing it, I mean, just almost half of where it was in January 2021 or January 2020 even, because it was stable in that level. 2020 and 2020 was fairly stable, give or take a few operational barrels that need to be rotated because of age. When you look at it from that perspective, then where do we have the most risk in the world right now, economically speaking?
Middle East.
It's clearly the Middle East.
Yep.
It's not Russia and Ukraine. It's the Middle East. It's the dang Middle East. And then maybe China, Taiwan. But it's crazy because, you know, this announcement puts a little bit of a floor in crude oil fundamentally because people expect them to buy more. And they've done okay. I mean, they've bought some 30, 40 odd million barrels.
10% of what they sold, right?
10% of what they sold. Yeah.
Right. I bought a little synthetic, more crude long today, just a little bit, because I'm kind of starting to rotate, which, by the way, this might be some people too. Like I looked in some of my long-term accounts And I am so over invested right now in 10 tech names. And I bet you guys are too. If you look into your mutual funds that you have in 401ks that you don't check very often, if you guys have those, I was like, holy shit, this thing is basically half of the whole 401k was 10 stocks because it was the growth fund. So I'm starting to pare back that and increase my positions in the things that I've been railing about for 2 years: copper, gold, silver. But oil is going to be my main focus over the next month or two.
Yeah, I think oil's a really strong area to focus in, and I don't know what the next ignition point's going to be. I completely agree with you, Bob, that it's probably Middle East related, but oil's not something that I want to take off my radar screen. And if it does reignite, I mean, we already alluded to, inflation. Again, you're gonna have a lot of things kicking in for potentially keeping at least inflation elevated in the near to midterm.
Okay, so where's the trade?
Where's the trade?
For me,
that's what we do.
Rallies, and for me, I sell rallies in oil now.
That's what we do.
Yeah. For me, I sell rallies in oil now, but it's just a very cautious kind of a thing for me.
To me,
again, yeah.
I'm watching again. We've hit anywhere between about 77.80 to 75.20. I'm looking for significant buy setups. However, they're scalpy in nature because we have the overhead rotation zone. Okay, coming down, we're now back below the daily 200. We have a lot of key levels overhead, so we could bounce. I mean, you can see a bounce quickly to 81, but in order to really sustain something where that bounce turns into something where I really want to keep it going a little longer term, we got to get above about 84 again.
Do you want to go to stocks yet, or do you want to go to gold?
Well, we'll go to gold, and then we can go to stocks.
Yeah, because gold, as you know, I'm overweight gold by far, and I still think I'm fine with it because of what you're hopefully going to say about the channel here.
Well, I'm fine with gold long term. I mean, if you look at the long term chart, even the weekly chart, it ran up. Remember, anything that runs up a little too fast, and I'm long term gold. And I mean, long term gold is still looking good. We ran up, we pulled back. This is a weekly chart. Pulled back straight to the rotation zone, and now we're pausing. Now we have triggered a double top pattern, which so far is stalled out at the first target. But if it rolls over again, it won't surprise me, because that would just take us a little farther back into the weekly rotation zone. And even if we complete all the targets on the double, we still have a gap to fill from it's still a contract roll gap, but it's still a gap. Even 50% from this run-up, from the run-up that really ignited at midwinter, we could still 22.20 is roughly the 50% of that run-up just below the final target and within the weekly rotation zone, which would give it some well-needed relief. Cycles are still headed down, which means there's still some downward pressure. And then I will really start watching for a substantial play back up in gold. Now, this would not be an area that I'd say I'm getting rid of all my gold and hopefully we're going to pull back and I'll just reload it all up. No, this is trading around the core position in gold, which means, we ran up a little too far, a little too fast, to unwind a little, and then look to add something back from my perspective at some key levels, or at least when we get some strong daily buy patterns.
I'm still on gold. I don't have any issue with gold, and gold is as much a longer term fundamental position for me. I did some scalping of gold, some trading of the gold futures, and I'm out of all that. But I'm really anxious to scalp long gold again.
So am I. That's why I'd like to go to a shorter term, see if there's anything on a shorter term.
For me, when I shouldn't say scalp, Jimmy, because that's the wrong language based on our upbringing, right? But for me now, scalping is a daily chart. I'm looking for something for maybe 26 days and call that a trade. But I just say, like, they've priced in, according to CME Fed Watch Tool, two rate cuts this year again. And today we had, so again, you guys, if you're listening to this, you're listening to it almost a full week after we've recorded it. And today is, what is today? Tuesday?
Tuesday.
Tuesday the 7th. And Neil Kashkari today just said, and I had said for the CME group, I do something called the Your Need to Know that they put out in the morning. And I put in there that Neil Kashkari was going to be important because he has been rotatingly referred to as a dove and a hawk, right? They've called him both. And he put out a paper yesterday. I'd encourage you guys to read. It's at minneapolisfed.org, where he talks about rates are significantly restrictive, but they're not working. Now, I paraphrased, right? He said things are so hot. So today we got interviewed on Bloomberg, and he said that I think people should get ready for rates to be higher for much, much longer. That, again, is a paraphrase. So I don't know how long the market is going to be pricing this in. They priced it in because of one non-farm payrolls number, which I guess is fine. It's understandable.
Oh, I think we're slowing. I just don't think the inflation's coming down. I do believe in the steady.
Fair enough.
Yeah. By the way, one of the things, rates are going to go higher, which one of the reasons inflation is sticking around, because now the Fed pays the Treasury pays $1.1 trillion of interest payments per year, injects that back into the economy. What percentage of bonds are owned domestically? More than 50% now, right?
Yeah.
Yeah. So that is going back into our economy. There are plenty of people, so retirees now, who are sitting on the beach earning, 5% on their $1 million savings and fine with it. And the Treasury is doing that. So what's one of the reasons? And they're going to go higher because they're not stopping spending. They're going to keep issuing longer end bonds. By the way, now this is something we haven't talked about. I can't believe we're half hour in the show. The Fed did kind of ease a little bit last week.
Yep.
When they changed the quantitative tightening program from $35 billion a month to $25 billion a month. The reality of it is they probably don't want to be selling as many bonds alongside a Treasury that's selling a metric crap ton of bonds, because they need to fund their profligate spending ways. So,
and I may be wrong about this, but that's something that Steph Pomboy, Emma Muhlman, I think Brian Westbury, and I think Jim Bianco all said to us that that's probably what they would do first.
Yeah.
I think Groman might have said it too. I think Santiago might have said it as well. But,
someone else, another real smart mind on this show. Oh yeah, Jim Uriel. Anyway,
Jim
go
Uriel.
on.
Yeah. Can we do S&Ps?
Yeah, one quick area that people might want to watch for if gold continues to pull back is around the 2250 to 2260 area is my next key thing I'll be watching for. Again, those shorter term setups, which for me is a daily chart. S&Ps yesterday, we closed above the magic 62.5. So even though we're channeling, we closed above that 62.5. So this recovery bounce should be, the probabilities have shifted where we should see, even with pullbacks, higher for longer. You have the election cycle, which historically for the second presidential term elections, you have from about mid-May running through the summer, you have bullish tendencies. Now, that's not a guarantee, and that's not a reason to trade, but it's generally
more. You
more.
to buy S&Ps, it's guaranteed.
No, I'm saying it's not guaranteed. Just like even though the probability shifted, there are no. Do we have any guarantees in trading? And I mean, unless it's cocoa futures.
No guarantees in anything
for sure,
anymore.
those are guaranteed.
Now the probability. So you have the probability, the election cycle probabilities are for upwards. You now have these short-term prices that have closed above the 62.5. That should signal we can at least retest that high area from early April. That does not mean we have to go higher beyond that, but especially if we get above 52.41 in the SPOOs, and then we were to take out Friday, 19th of April, the day my house closed and I was fully free of Chicago. If we take out that low on a closing basis, after hitting at least 52.41, I'd watch out below. I would really watch out below.
So can you repeat that again? So after we hit 52.41,
Yes.
If we then reverse and take out the April low, it's a forget about it moment.
Well, the probabilities will shift substantially. That we could see a pullback between maybe 4,700 to 4,600 in
Wow.
the I'll say the medium term. Now that may never happen. The trend, here's the weekly chart. We went on the terror since the beginning of end of October, late November. We had this is the weekly 3-week pullback into the bottom of the weekly rotation zone, and we've rotated up. So the trend on a weekly basis is still up. But if this gets above that 52.41, it's in potential double top territory. And then if we close below that 19th of April low, you've then triggered a double top, which could, and I have the longer term harmonics in purple here, and you see the final target for the double top is right between the 50 and the 62.5, which would wipe out this which could wipe out all of the rally since really the mid-December of.
So Bobby, here's the trade if we hit 52.41, and you tell me what you think. Sell those puts maybe at a 3-to-5 ratio. Sell those puts, and what's the April low?
Sell which puts, Jimmy?
So the April low puts, what's that price?
The low is 49.63.
So let's say sell the 500s or the 5,000s, right? Sell 3 of those to buy like 100 ticks lower. 3 to 5, because it seemed like 1 to 2 was being long too many puts, and 2 to 3 was not being long enough puts. But 3 to 5, that's what I'm thinking of doing if it does that as my protection trade. Because always on these up moves, I'm always putting in something, and skew will blow out if we start heading lower, and then I'll be long those extra options. Do you like the trade?
Yes, yeah, I love that trade. I do.
Yeah.
I'd love to ratio if we get to double top territory and then actually trigger it, or get close to triggering it, because there'll be some front run option. There'll be some front run patterns to possibly get in slightly before it triggers. Yeah, I'd love to ratio puts on.
And it won't be that expensive to put it on, because I'll be selling 3 to buy 5.
Yeah.
So what I was thinking is if we get up there was to sell like 49.50s.
49.50s is probably better. That's what
sell like 3 lower than that, or buy 3 lower than that.
Yeah, buy lower.
Yeah, right. Because I could see we've seen this a lot, especially because this is a weekly chart, right, Mike?
Yes, this is a weekly.
Okay, this is a weekly chart. It's a struggle to get through that level, and then once it does, especially because that level will be pretty close to the 50-week at that point, is my guess. It won't be on it, but it'll be close. And that's obviously just like experience of looking at this for 30 years. And
we're trying to figure out where the volatility comes.
And you might be able to time that really well. The problem I always have with the option side of this, guys, why I don't trade them as much as you guys do, is the timing of it. That's what I struggle with. So I'd be looking for advice on the months if we get there.
Yeah, I didn't even think of that part yet. It's a work in progress.
I mean, this is not. I mean, unless something really catastrophic happens in the world, we'll get some. I'll probably be on again well before this would trigger.
That happens, right? Yeah.
You will, because you'll be on. We got you scheduled for the first Friday of June as well. I'm sorry, the first Tuesday in June when we record. The thing I really like about this is there will have been something that's happened by then, because as you get closer and closer to the election, we're going to see more and more little dominoes fall that always do pre-election, one way or the other. So we'll know if we still like this idea at that point.
Yeah.
So I actually like this format, by the way. If we start looking at trades that might trigger 3 and 4 months from now, continue to sort of review them as we get to the next show.
I like it as well.
Really valuable to people.
And by the way, as long as we really don't get a move above, let's just call it about 54.50, it's not exact, but this could even go and break above the highs from the week of April 1st that were made right in the beginning of the week. We could run up and above those highs and not invalidate the pattern. That's what I like about spotting this. Now, this pattern may not trigger, but we can start planning for stuff and start considering our options, no pun intended there, well before it triggers. So, hey, when I see a pattern that might never trigger, I am at least prepared for something. And then I can take time during, as we get closer to potentially triggering it, as long as it's not invalidated, to plot out use new information to plot out a really good either downside hedge or portfolio rebalance should something happen. Remember, on a weekly chart, this could grind higher again for 4 or 5 or 6. It could grind higher into the Democrat convention in Chicago, and maybe then something could happen.
So on the Mike Arnold, which is actually I forced you into this +3 to -3 scale. You're generally speaking like a 1.5 bull. Am I hearing you right? Looking for spots to get in, correct?
I'm 1.5 to 2 bull.
Okay.
In the short term.
Right, in the short term, that's what I'm talking about.
Yeah, in the medium term, I'm neutral, and if we get up above some of these key levels, especially retest above about 5,290, 5,300, and then start rolling over, then it will get potentially interesting going into closer to the election, the really hardcore election season.
Speaking of which, do you think whatever president wins this election, I think 2025 is going to be a massive hangover year with the debt we're running up, with how we're papering over, just so many different fissures and flaws. I think it's going to be awful.
One of my worries about going forward, and I'm not really even sure how to communicate this yet, but one of my worries going forward is that our fiscal situation looks more and more like Japan every day to me. Every day. And right now, everyone is all about, was the Fed going to make money easier again so that we can just make money easy again, right? And at some point, the Fed's just going to say, okay, we're done. We've cut rates 3 times, whatever. We're going to sit here. Everything looks good. And then like all of a sudden, people are going to be like, okay, so what's going on in the world? When did we build this kind of a fiscal situation up? Like, when did it get this bad? And then they might start to be a little bit more concerned. I don't know. I mean, again, I'm not even communicating it correctly at this point, but I see so many things wrong, yet I'm long stocks. And I feel like the vast majority of people see so many things, don't see all the things wrong we see, and they're long stocks.
And it makes sense to still be long stocks at this point, at least in the short term. How valuations still in the macro don't make sense. I'm just talking stock valuations across the board are still multiples way too high. And I still talk to people who say valuations don't matter anymore. And the more I hear valuations don't matter anymore, the more in the long term they will matter at some point. When that some point comes, we're going to get warning. Everybody says, is the market going to crash? How often does the market just crash? You generally start unwinding things, and you can get even more rapid unwinds, but I'm not looking forward. You might not be looking forward to 2025, and I don't think I am either, but I don't think I'm going to be looking forward to a few years after that. We could be in for a really interesting time from my perspective.
Sure. Yeah. And there's something else I want to add about stocks too, is the S&P risk premium, meaning the way I define that, I think you guys do too, is earnings yield versus 10-year treasury yield. It was kind of the Greenspan preferred method of valuing stock market. And it is as low as it's been in decades right now, meaning, the earnings yield on the S&P is, it's just about the same thing as the value as the rate on the 10-year. So a lot of people will choose to get 4.5% on their 10-year money instead of buying. So you don't have that buffer that we had in the past, if that makes any sense.
Excellent point.
We've also got like the term premium between like the 3-month and the 10-year, which is negative, right?
Right.
That's like you do not get paid for holding 10 years right now. We saw that in the auction yesterday, right? The 3 and 6-month bill auction went stunningly well.
Of course.
Well, we've seen other auctions not go so well. That term premium has to reverse itself. I mean, why would anybody lend the U.S. government for 10 years when you can just keep rolling 3-month bills?
Right. No doubt about it.
It's funny. A friend of mine called me the other day, and I actually relayed him to somebody you both know, Matt Engstrom. And he said his son had a CD rolling over. He wanted to know what he should do. And he told him, he said, tell your son to get a treasury.gov account and just roll 3 months. Don't worry about CDs. Don't even do it.
Yeah, right. Yeah. Or even you can go as far as 2-year, right? I mean, 2 years still trading about 5%. So I say 3 months, 6 months, 2 year, and then roll, roll. It
Yeah,
says
you
they
could
come
set up
down.
a nice ladder. You could set up a really nice short-term ladder in that,
Mhm.
because what's 2 years right now are close to 4.8. I mean, that's not
Okay.
shabby.
No, it's not at all.
Not
And the
shabby at all.
second that the 10-year gets to 5.5, maybe 6, start tipping your toes in that water too. Because I do think the Fed might come in and start buying bonds again.
I have a stock I'd like you to look at, but do you want to look at the NASDAQ first, Jimmy, or maybe copper?
No, either one. I like them all. Yeah, we got about 10 minutes.
All right,
Well,
so I am long Diamondback Energy, Mike, FANG,
I know you are. Yeah.
FANG. Okay, and it's got a really good double top. And when I saw the double top trigger, I thought, okay, I'm not going to short it. Maybe I'll exit my longs. And I didn't. I can't honestly tell you why I didn't. It didn't hit my stop, so I just left it alone, right? Can you sort of plot this out and tell me I'm not stopped out yet? And I also didn't get to a level where I could adjust my stop yet. So what do you see in this double top? Because it's pretty much technically correct, is it not?
it's technically correct. It dipped in. This was the first dip in the weekly rotation zone and rotated back up. Even if it completes, it doesn't get down to the bottom of the rotation zone. It's so this
Right.
is still it's what I call this is a channeling double, because it did not hit the stop reduction or the stop reduction. As long as this does not close on the daily basis above 206.75 or trade through 208.50, the pattern is still intact. If you're going to maintain your long position, you want to see a close above 206.75, which would mean, let me put those lines back on, because that would actually mean it, unless it were to happen today or maybe tomorrow, it would still be holding the channel to the downside if this does not close above 206. So we could even get to 205 and the pattern would still be intact. And based off the way this has been trading, we could see the rollover, and the next rollover then could hit the bottom of the channel and pay out probably that first level for the double.
Okay. When I said I want to get more into the crude space, where do I set up my long position on this? What do I have to wait for?
Your long
FANG?
position specifically on
No,
FANG?
I want to be long this for the next
Right.
couple of years.
Where
I
would
want to
I
get into.
look for? If this were to play out even more, I'd be looking about 190. The only thing, if this were to invalidate the double and we broke strongly above 207.50, that would then be okay. Well, it didn't. Hey, the double was one of those that didn't work. And now we've broken out. Something would have happened in the world because crude also be taken off. Then I'd be looking to just buy a breakout. That's where, okay, you didn't get the pullback, but now we've triggered a breakout long, which would be 207.50 for me.
Okay, yeah, that's the way I would like to trade it too. Like I set in stops today on some other of these oil names. I'm not. My licensing is for futures, whatever. Let's just say it was crude, but it's not. But that's probably the way I'll do it. Trade above 207.50.
Other than
What
that,
does this thing pay you a dividend, Bob?
What's up?
Does it pay you a dividend?
It does, as a matter of fact. Yeah. As a matter of fact,
yeah, it's got a
I think it's,
1.76% dividend yield right now.
Okay, I'll take that.
yeah.
A little bit of a buffer
When
there.
is it? I think it's May 24th or something that it gets paid, somewhere around there.
And by the way, so guys, I'm talking about an investment, not a trade here. Yeah, that's what I'm moving oil into. But again, even the investments, I think these guys are the same way. We manage it, the entry points and exits, just like a long-term technical trade, right?
Yeah.
Yeah.
And I'm in it from the end of March, so I briefly went negative on the trade, but I'm well positive right now, and that's fine.
Well,
Good.
the other reason, so I have the red and green lines are the harmonics up here. So we came up to the harmonic level. It spiked briefly above that, but that harmonic level was projected from back in November of 22. And we've stalled out here for 1, 2, 3, 4, 5, 6 weeks so far. That level was 207.55. So that's key. But if it does, let's say we don't pull back and we break higher, the next major targets would be roughly, the next minor target would be 261. The next major target would be above 300. Now,
That's nice.
Again, but those are very long-term targets. This target took boy, this target, since I've had it on the chart back from that November 22, it took until April 24 to hit that target. So keep that in mind. It's not
It's
like
really
it's going there tomorrow.
it's really funny because when you look at like technical analysis, so I'm just looking up because Mike said around 190, right? For you, Jimmy,
Yep.
get into this one, and I'm trying to find
or above 207.50.
Yeah, I'm trying to find my entry. I got to go back a bit, and because 190 sounded familiar, 194.12. That's where I'm in from, and you see this a lot with technical analysis, right? Because that was where my trigger was approximately there, and by the time I remembered to get into the trade, it's about 194.12. So when you look at it from that perspective, the amount of times that things line up like that is bizarre, right? Like we talked about, I don't remember what it was, but I said the 50 will probably be pretty close to that level at that time. People laugh at technical analysis. And again, I remember Scott Nations, who's a friend of ours, a great guy, talking about how technical analysis was all lines and squiggles, but it's too reliable relative to the times it's not reliable, but it's too reliable to ignore. And when people ignore it, I find it silly. And as a matter of fact, people who ignore technical analysis, those are the people you see in interviews on financial news and also that crappy TMZ financial station, is they'll say things like, well, this is just a technical move, so it doesn't really matter.
It can really
That's literally, guys, when you hear people say this move's technical, so they have no idea why it's happening. That's why they say that.
And someone who embraces technical analysis is at least smart enough to know, yeah, I don't know why the move's happening, but it's happening.
Yeah.
I don't need to know why the move's happening.
What's
So
that hierarchy of questions thing, Mike, that you say all the time?
What is the best? What's happening? What's working and what's not? Okay, and then you can get into how like, all right, what's the trade? How am I getting into the trade? The people who focus on the whys, first of all, it's intellectual masturbation, and you don't need to know. I don't know. Yeah. The trade's the trade. And you ask 10 people, you can sometimes come up with 10 different answers. Who's right then? I don't know, but a bunch of people are wrong if they're trying to focus on the why. That's why I focus on the what. What's the trade? What's the setup? What's the stop level? What's the target? And then how am I getting into this gosh darn thing? NASDAQ also closed above the magic 62. Now, this is a very lopsided double, but it will still qualify. So you still have the April 19th lows to watch for. It has to get above 18,310. Everything I said still holds true. Now, the NASDAQ did a little more technical damage because it actually came down and closed below the weekly rotation zone. So it from a technical perspective is not acting as strong as the S&P. Now, 18,310 is a stone's throw away. Probably by the time people are watching this, it will be above that level. This could easily come back down to below 16K if we were to trigger it. That's a big if because it might not trigger, but just pay attention to those lows, and those lows are exactly 17,113. If we were to come back down and close below that, I would structure a trade roughly, which is so fascinating because I'd actually shift these to conservative side on the doubles, which we don't know where that top is yet. But the second target, if you look on this chart, the second target is the yellow, where the yellow meets the red. Look at the breakout level. So the level we broke out of in November of last year retested in December and held. So you had the breakout right here, little sideways, the pullback retest. Look where that second target is for this potential topping pattern. It's right back to that key level on a major, on a very significant basis. So for structuring a trade, I'd really be eyeing that 15.9 to 16K area.
That's interesting.
That is interesting. I like it a lot. So on the Mike Arnold 3-to-3 scale, you are -1 on this, right?
I am short term still bullish about maybe a 1, a point
Yeah.
0.5 to about 0.1. We start rolling over this, then I will shift. This is my preferred short over the S&P. The Russell, if we jump back above 2104 and then break below the 19th of April, which is also, look at this chart. That's the 200,
Wow.
which we bounced off of. And that was one of my key targets for the shorts that we ran down there. You can go back to my daily show, which I said the target's the 200. We spiked into the 200 and reversed. But if we were to trigger this, look at this beautiful pattern. Look where that could take us back to the Russell. Look at this bottom.
Wow.
1, 2, 3. This could take us back to about 1665 area potentially. And then if that broke in the Russell, oh boy, because if that 1665, that would be a quad bottom. We could start retracing the. Now this is a big if, but my spidey senses are up on this because it means something's really unraveling in this country. We could retest some of this low area from the COVID lows or the severe cold lows.
That's
Jimmy, can I throw one specific question in for one more?
sure.
Copper weekly. So in the last 29 weeks, copper's risen about 30.4%. I just want to know if the rally is a little tired. I believe in copper fundamentally. Like I said, over 29 weeks, 30.4%. That's a big move. And it looks like it's gone a little parabolic. So is it ripe for a pullback?
Yes. Now, remember, there's two kinds of corrections, sideways and pullback. So far, it's been a sideways correction. However, even a pullback to about 440 is just a return to take off the severely overbought conditions and return to the rising rotation zone. That does not even take us to the key breakout zone back at that 428 level. So, yes, it is tired, but it's so far just a sideways correction. Now, one thing I'm keeping an eye on. We just got a double top pattern. We just got a double, and I should call it a potential double top. So where does that fit in on the weekly chart? If we were to trigger it, that could take it. Let me go to the conservative targets real quick because copper's been so gosh darn strong. The conservative targets would take us back to the 50 exponential on the daily. And let's take a look at that on the weekly, would take us just into the weekly rotation zone, which would be about a target of 430. So even if this were to trigger, take us back to 430, it would not destroy the bullish case on copper. And look at that breakout level. So the conservative targets on the double, and this might never trigger, but if it did trigger, weekly rotation zone, and that's the key breakout level that we were watching for a very long time, right around 428. Magically seems to line up.
Before you tell people where they can find you, Mike, Jimmy's fundamental thesis on copper is so strong that the reason I ask is so that I can load up on more if the technicals hold, which I think they probably will.
Which, by the way, one thing I'll add too is that if you watch the TMZ of financial networks, they don't like to talk about things like copper because they find it unsexy. They'd much rather talk about NVIDIA and shit like that. If you watch our show, you're not surprised by this move at all. We've been banging this gong hard for essentially a year and a half.
See if they lead with a cocoa story.
What's that? We should.
See if they lead the show with a cocoa story.
Right. That's because we do it right. Michael, tell them where they can find you before I play us out.
All right. You can find me on the YouTube Path Trading Partners channel. You can follow me on Twitter at @MGArnold. Those are the two best places to find me.
So, and you guys, thank you so much, first of all, for watching the show. We appreciate it. We do this show every week. We have been for a couple of years now, and it's the traction we've gotten out of it is amazing. It humbles us. We mentioned that the TMZ Financial Show too. We didn't start out with an extra grind. We were in mainstream media, and we liked it very much. Over time, it dawned on us that it was a bunch of crap most of the time. Not all of it. Most of it's a bunch of crap. On our show, you know you're getting our honest opinion, and it's not being colored by who the sponsor is for that week and things like that. So thank you. You will get honest opinions from us. We appreciate it. Thanks for joining us on the Future's Edge.